Good morning, everyone. Happy to have you joining us for this final seminar in the Paducah Chamber of Small Business Seminars that we've been having during the month of September. I'm Sandra Wilson, president of the Chamber. We've had a really great lineup of topics. They are all posted on our website, paducahchamber.org, under seminars. And so I hope that if you missed one, that you'll go back and watch it. As we all know, small business is really a big business in our community. And the topics that we chose for to feature this month were a result of a survey that we conducted of our small businesses. It doesn't seem that long ago that we were pushing information out daily about the Paycheck Protection Program and how a small business could utilize that to help save them during this COVID pandemic. And having relationships with bankers and with your accountants and all of that became very critical to make that happen. So today we are going to talk about those PPP loans and how to transition those to grants. This was one of the single largest ways the federal government helped businesses during the COVID-19 shutdown, and that was through the Paycheck Protection Program. It was designed to provide a simple way for businesses to keep their employees on payroll. And since its creation in March of 2020, more than 48,000 Kentucky businesses received those loans valued at $5.2 billion. That's a lot of money that came into our state to help our businesses. So thank you for joining us for this topic. WPSD is live streaming this call. We're also recording it, and it will be posted on our website later. I believe it's also on Channel 6's Facebook page. If you have questions during the webinar, you can enter those in the chat box if you're watching via the Zoom call, or you can also email those to me at swilson@paducahchamber.org, and I'll be happy to ask those. We are going to hold the questions until the end and let the speaker speak first. But first thing that we have to do is thank our sponsors. We could not continue to do the programming that we have been striving to do and provide services to our members if we didn't have sponsors willing to help us. So today and all month, we've had our sponsorships from FNB Bank and from Lundberg Medical Imaging. So now we're going to take a minute and feature Ike Nickel with FNB Bank and then Terry Lundberg with Lundberg Medical Imaging.
Hello, everyone, and thank you for joining the Paducah Chamber Small Business Seminar Series. My name is Ike Nichols with FNB Bank. FNB is a proud sponsor of this year's series. We know that 2020 has been somewhat of a challenging year for a lot of small businesses, so our hope is that some of the information you gain from this series will be useful for you going forward. Again, on behalf of FNB, thank you for taking time out of your day to join this meeting, and have a good day.
Good morning. I'm Terry Lundberg, CEO of Lundberg Medical Imaging. And if you're a small business owner, you already know that CEO stands for Chief Everything Officer. Lundberg Medical Imaging is a radiology testing center serving patients in a 100-mile radius. And as the leader of that company, I can honestly say that joining our chamber has been one of the best decisions I've made. It's the education like the seminar you're going to watch in a few minutes, the business advocacy, and those valuable community connections that has really helped lighten my load and made my business more profitable. When our chamber starts holding our Power Partnership meetings in the mornings again, please ask me to sit at your table. Our chamber is here to be your guiding light to help facilitate those important connections and help your business thrive and grow. Lundberg Medical Imaging is super honored to sponsor today's seminar. Thank you so much for joining us.
Great. Thank you again to Lundberg Medical Imaging and FNB Bank. So what made the PPP program so popular was the ability for businesses to have their loans ultimately forgiven, making them as grants. However, the loans came with specific criteria that needed to be fulfilled in order to have them forgiven. And today, our panelists will outline requirements for loan forgiveness and answer some important questions for businesses hoping to have that forgiven. I'm going to introduce our three speakers, and then we'll bring them in one at a time. That they're going to begin each one with making some comments, and then we will take questions after all three have spoken. So first is Lori Noel. She's been in the banking industry for over 28 years. She has served in many areas of the bank with primary focus in lending. Lori has been with FNB Bank since 2008 and currently serves as the Chief Lending Officer. Next, we'll hear from Ashley Grooms. She is a partner with Williams & Lentz. She has practiced accounting for 15 years in Mayfield and Paducah. Her primary focus is on individual and corporate tax preparation, tax planning, and small business consulting. She is a graduate of Murray State University, my favorite school, so go Racers. Mark Heckenberg was a partner with Kemper CPA Group. He has been in public accounting in Paducah for 27 years. Mark has a wide range of experience in public accounting with a focus in business and individual tax compliance and planning, business valuation, and consulting. So we really feel honored to have these three people with us today as our panel. So first of all, we're going to hear from Lori, then Ashley, and then Mark, and then we'll come back together as a panel and try to answer any questions that you may have. You again can send those to swilson@paducahchamber.org if you're not going to be able to put them in the chat box on the Zoom call. Thanks. Lori, we're going to start with you. Lori, if you could turn your camera on and unmute yourself. And now if you would just unmute your mic. There you go. Thank you.
Good morning. Okay. It is not letting me share the screen.
We'll have to give you permission to do that. Just one second.
Okay, thank you. Okay, Sandra, can you see the PowerPoint?
Yes, we can. We're ready to go.
Okay, thank you. Good morning. Thank you for the opportunity to speak to you regarding the Paycheck Protection Program. We have all experienced unprecedented challenges in our businesses this year, and many of you have utilized the programs established by the CARES Act, including the Economic Injury Disaster Advances and Loans, as well as the Paycheck Protection Program. These programs were approved and implemented very quickly, and now we are faced with the next phase of the Paycheck Protection Program for the application for forgiveness. Today, I would like to share some best practices and guidance on applying for the forgiveness based on our implementation and experience with the program. Please note, the processes and documentation requirements discussed today are based on today's current guidance and may be subject to change, as many other of the program requirements have been, if Congress passes additional legislation to streamline the forgiveness program for smaller dollar loans. Okay, I've used my Paycheck Protection Funds. So the next phase, now what? What do I do to go ahead and initiate my application for forgiveness? The first recommendation we have is contact your lender first and foremost. Each lending institution is going to have their own process and procedure in place in order to apply for forgiveness. Some may be done by a manual process, some may be utilizing a portal, but you need to understand what your lender's requirements are going to be first and foremost. Next, you will need to review application options and determine which application you would qualify to apply through. The 3508EZ is the application we recommend everyone pretty much start with, and we'll go into some details on that in just a moment in order to determine what is your best avenue. Once you've determined your application, then you will need to work through gathering the documentation required for your submission. completing the application, and then ultimately submitting that application with the supporting documentation through your lender's process. Once your application has been submitted to your lender is going to have up to 60 days in order to process that. Now, from our perspective, I will tell you, we don't want to sit on these any longer than we have to. We want to be able to expedite those processes through for both our borrowers as well as the getting everything in the queue for SBA. So I would not anticipate you see an extensive period of time with your lending institution, but communication is going to be key through this process regardless. Once your application is final, then the lender will communicate the decision to you, especially if there is any amount that is anticipated to not be forgiven, and then that application would be submitted to SBA. Once the application is submitted to SBA, SBA has up to 90 days in order to decision and fund those applications. There's some news, I think, that is coming out this morning that SBA has not started looking at any applications at this point that have been processed. They are anticipating to start that process within the next week. So we hope to start seeing some level of action on applications that have already been submitted. But at this point, SBA has not reviewed any applications that have been submitted. If there is a balance that remains on your loan, then the borrower will be contacted from the lending institution following the SBA's funding, and arrangements will be made to set that balance remaining up on payments, depending on what the terms of that loan were from the original application date. As far as choosing your application form is concerned, again, what you will have available through the PowerPoint is on the 3508EZ, the information that is provided. Basically, there's 3 scenarios in order that you can qualify for. You must meet one of these 3 requirements in order to use this form. I'm not going to go verbatim into these options, but for the most part, if you are a self-employed individual, an independent contractor, or a sole proprietor who has had no employees at the time of your PPP loan application and therefore did not include any income, or I'm sorry, any salaries from your employees, that is going to be the simplest qualification and will attest to a lot of applicants. The options 2 and 3, I do want to point out, when you look at these options available on the application, it is a 2-step process for options 2 and 3. You must meet both of these qualifications within these specific options, and you also are going to need to make sure you retain any documentation to support. From the lending perspective, we do not necessarily verify all of the information as far as your qualifications on what type of application you apply for, but that is something you are going to be required to retain to support if your file is ever pulled for an audit. All of this information is going to be available on the applications, and later in the presentation I will provide you with a resource available where you can access all of the forms, the FAQs that have been established by the Treasury as well as the SBA, and also looking at the information available as far as the actual rules that were initiated. If the applicant does not meet one of these 3 scenarios, they will need to defer to the Form 3508 form. There are safe harbor options relative to the FTE requirements that are available through both the EZ as well as the standard application, and the safe harbor provisions will be covered later in the presentation. As far as your other key areas and information to consider, the covered period is something that we are seeing a lot of question on. With the most recent changes in the guidelines, all borrowers, regardless of the day that they accessed their loan or originated their loan, are now eligible to extend their covered period from the original 8 weeks to 24 weeks. That is applicable for all borrowers, regardless of when you took out your loan. If you just choose to do a 24-week covered period, you can actually file on that before you reach that 24-week period once you have utilized all of the funds. There are 2 different covered periods that you can choose. The standard covered period is going to begin the day of your loan origination or funding. The alternative covered period must begin within 16 days, but if you are needing to modify your covered period in order to maximize your payroll cycles, then you do have the ability to do that. You just need to make sure that it begins within 16 days. We're not finding a lot that are required to do the alternative covered period. We're finding most people are just extending their 8 weeks to 24 weeks. As far as payroll is concerned, and Ashley will touch on more detail on this, but payroll must equal a minimum of 60% of all eligible expenses to avoid a reduction in forgiveness amount. Payroll can equal 100%, and that is actually something we're having a lot of communication with borrowers. If you can use 100% of your funds towards payroll, and you want to apply everything towards payroll, that is permissible. You do not have to show something in each of those buckets or requirements within the other non-payroll expenses. So the advantage to you on that is going to be the documentation requirements, because any information that is submitted as far as the application is concerned must be documented. So there is an advantage if you can go off of strictly on payroll. Hopefully that will help reduce a little bit of your time involved as far as providing documentation. Owner's compensation has also been a key point of discussion with many applicants. This is something that we wanted to make sure and touch on briefly, and again, Ashley will go into a little bit more detail on this. If you choose the 24-week pay period, owner's compensation is capped at $20,833 per individual. But that individual is going to also be based off of all businesses in which he or she has an ownership stake. So if you're an owner of multiple businesses and you have 3 businesses that you have owner compensation and it exceeds $20,833 on an annualized basis, you have the option, you can split that between 3 businesses, you can file just on 1 business. You have the option of how you want to allocate those funds, but you will be capped at a total of $20,833. That is something that I think it was a little bit of a misconception initially, both at the lender level as well as the borrower level, but that is something we do want to point and clarify for the owner's compensation. The rules for filing on owner's compensation and payroll also are going to vary based off of the entity type. So if you have an LLC, you're going to be referring back to how you file on your income taxes. If you have an S Corp or a C Corp, there's different qualifiers within that as well that Ashley will be touching on. Documentation requirements, these are just some examples of some information that we are seeing come through, and these are some things that if you can provide this information on the front side, hopefully this will help eliminate as much going back and forth between your lending institution. For payroll, primarily we are looking at payroll reports. Ideally, you would be able to pull a summary report for the covered period. I know QuickBooks seems to be the most common reports that we're seeing come in. I know not everyone does QuickBooks, but within your payroll cycle, if you are able to pull a report that covers the entire covered period, as well as the detail that supports that to document the individual payroll, that is the most beneficial, because that also allows us to help test for the $100,000 annualized cap limits, as well as owner compensation requirements, in order to do a check back and working through that validation process. The payroll tax filings for the Form 941, we recognize those are not going to match exactly as far as the funds are concerned. But what we're looking at basically is that is comparable to the payroll documentation that is provided. In particular, if you process your own payroll, we will need to see that additional 941 documentation. If your payroll is processed through an accounting firm, then typically that third-party documentation will help suffice the documentation requirements. For other payroll documentation, you can also provide a copy of the state quarterly business and individual wage reports. If you are filing on the state taxes, the unemployment insurance tax filing report or the UI3 form is eligible. And then for employer contributions for health insurance and retirement plans, if applicable, and if used for forgiveness, then we would need verification of those invoices as well as payment in the form of either a canceled check or a bank statement if it was an automatic withdrawal. For non-payroll expenses, the key figure that we've been seeing primarily has been rent or lease or mortgage interest. There's two parts that we will need to verify on that. If it is a rent and lease, we will need a copy of the lease agreement to verify that it was in existence prior to February the 15th of 2020. We will also need documentation of payments that would have been made during that covered period, again, either in the form of canceled checks, receipts, bank statements, something along that line. For mortgage interest, we would need documentation that that mortgage loan was in place on or before February the 15th as well. And in addition, we would need the documentation for payment for interest that is paid. Most likely you would just get that from your bank in order to verify the interest paid amounts and eligible payments. Very similar information as far as utilities are concerned. We would need verification that they were in place as of February the 15th, as well as documentation of payments. For the FTE documentation, the most common documentation we are seeing on that is actually being covered through the individual payroll reports as well, because the very last payroll report that you pull in order to cover that covered period typically is going to address your FTE requirements. If you have a large number of part-time employees, that is something that you may need to provide some additional documentation on. Sometimes we're seeing reports come in to where we will have a listing of the employees with full-time or part-time status. You have the option on whether or not on your part-time employees, you have the option to determine whether or not they are listed as a half employee, and you can apply that scenario across the board, or you can actually do it on a prorated amount based off of the number of hours worked. So you do have a couple of different options on how to account for your part-time employees. On the documentation requirements borrower must maintain, I don't have the detail in here. However, the application documents, when you pull the instructions and the application information, I want to just point out that there is a responsibility for the businesses to maintain and retain documentation for up to 6 years. This documentation primarily is going to support whether or not you met any of the safe harbor provisions, whether or not you have or how you documented your FTE counts. This information may not necessarily be required to be provided to the lending institution for a decision. However, you must retain that. So if you were audited by SBA, you will need to be in a position to support that documentation. So just wanted to point out, this is something that you will want to pay attention to through those application documents, and make sure you have this information available and on file. Key dates and timelines. I've had 2 or 3 questions just this week where customers have been a little concerned about a deadline that they must apply for forgiveness. I'm not sure where this is coming from, but as far as the deadline that a borrower must apply for forgiveness, that is 10 months from the completion of the covered period of that particular borrower. So it's once you have completed that covered period, so if you chose the 24-week option, we're seeing a lot of those that are just now coming up for the beginning of October. So that 10 months from that date is when you must apply for forgiveness. Obviously, we see a lot of businesses wanting to go ahead and apply for that. We also see a lot of businesses with small dollar loans that are actually opting to not apply and waiting on congressional approval or decisioning on whether they are going to offer a streamlined process. So everything is fine to wait on that. Just make sure that you do not miss that 10-month deadline, though. That's something, again, hopefully you'll be communicating with your lending institution for additional information and tracking. 60 days is the deadline the lender has to review and decision an application for forgiveness. And then SBA has 90 days in which they can review and decision an application for funding. If there is a balance remaining on your PPP loan. In other words, it is not 100% forgiven for a couple of different factors. One would be you did not meet the requirements as far as the reduction in wages, the reduction in FTE, and or usage of the funds. Or if you had an EIDL loan advance that has been deducted, then you may very well have a balance remaining at the end of the forgiveness process. If so, your lender will be in contact with you in order to work through the repayment cycle. The repayment cycle primarily is going to be based off of a 24-month or 60-month amortization, or off of a maturity. However, keep in mind, you will only have a few months remaining on that amortization. We hope, based off of what we are seeing thus far, there will be very little that is actually carried forward from that is not forgiven. However, every situation is different. The 24-month and 60-month maturity is going to be based on when you actually incurred or originated your loan. So loans originated prior to June 5th had a 24-month maturity. Loans originated after June 5th had a 60-month maturity. Some common questions and information that we are responding to with customers has been state and local tax category. That refers to employer paid state unemployment tax only. That has been a common question and a little confusing both initially as well as on the forgiveness application. And as previously mentioned, aside from payroll, which has to equal at least 60% of all eligible proceeds, all categories do not have to be considered. If you can meet your requirement based off of 100% of payroll, that is acceptable. The key is if you submit a figure on your application, then those figures must be documented and will have to be reviewed and verified by the lending institution. So we're just trying to offer some guidance to hopefully help you streamline the process and make it a little easier on documentation requirements. There has been a lot of confusion and still some uncertainty regarding how SBA is going to handle the EIDL advance. These guidelines do not apply to the EIDL loan. This is strictly for the advance. When you submit your application for forgiveness, if you did receive an EIDL advance, which the maximum was $10,000 and most were in $1,000 increments, those details must be provided on your application. You must enter the application number as well as the amount of the advance that you received. So that as you're gathering documentation, if you did receive an advance, you will need to make sure and have that information available. We are still waiting on SBA guidance on how these funds are going to be handled. It is anticipated, based off of the initial information we've received, that if you received an advance, it will be deducted from your PPP loan amount. So in that case, we do anticipate having several customers with a balance owed after the forgiveness is finalized, and that is when we would be in contact as far as repayment is concerned. Basically, a key that I want to focus on just in closing is communication. In summary, we are working through this process and changes as new information becomes available. A relationship with your banking or your banker or your lending institution has always been important, but this year we are finding that even more so as we work through these trying times, both through the PPP programs as well as just working through your business cycle as everyone has experienced challenges. If you do not have a relationship with your bank, please take the time to establish that and work through the good times and the challenges. Bankers enjoy the rewards from seeing businesses succeed as much as we do as far as working through processes and seeing businesses grow. FNB Bank is committed to serving our businesses in our communities and all of our markets, including Paducah and McCracken County, and any of us are available to help answer any questions you may have and appreciate the opportunity to serve you. At this time, I'd like to introduce Ashley Grooms. She is CPA and partner of Williams Lentz.
Thank you, Lori. We appreciate you very much. Ashley, I'm going to have to ask you, yes, there you go, camera and mic on. Thank you, Ashley. It's up to you now. Are you going to share your slides?
I am going to share my slides.
Okay, you should have permission to do that.
Okay, are you guys able to see my slides?
We got it.
Okay. Well, good morning. Lori spoke a lot about the process and documentation for applying for PPP loan forgiveness. And this morning, I want to talk with you about two different issues. The first being what expenses actually qualify for forgiveness, and the second being a couple of issues that could result in limitations on fair forgiveness. So first, in terms of what expenses qualify for forgiveness, there are two broad categories. The first being payroll cost. Payroll costs include your cash compensation paid to your employees, plus employer contributions to employee health insurance benefits and retirement plan benefits, plus state and local taxes. The second category is non-payroll cost. These include mortgage interest, business rent or lease, and business utilities. So in terms of the cash compensation category of payroll cost, this has been defined very broadly by SBA and Treasury to include almost every type of compensation you would pay to your employees. It includes their hourly wage, salary, tips, commissions. It includes bonuses, hazard pay, severance pay. There are a couple of things that specifically are not included in cash compensation. The first would be any payroll that is in excess of $100,000 on an annualized basis. So if you're using the 8-week period covered period of time, that would equate to $15,384 per employee. If you're using the 24-week period of time, which as Lori mentioned, we anticipate most borrowers will use the extended covered period, that is going to equate to $46,154 per employee. There are some special limitations related to owner compensation that we'll talk about here just shortly. The other thing that specifically is excluded from cash compensation relates to some federal tax credits that are allowed under the Family First Coronavirus Response Act. And those credits relate to compensation that you were required to pay to your employees for certain COVID-related absences. As we mentioned, there are some additional requirements and restrictions related to owner's compensation, and those restrictions vary based on how you are taxed from a federal income tax perspective. I do want to mention, Lori had said, and she's correct, that if you are structured or organized as an LLC, the category that is going to apply, the limitations apply are based on how you're taxed. So if you've made an election to be taxed as an S corporation, you will follow those guidelines and so on and so forth. I do want to mention that there has been some guidance that these rules apply to owner employees that have a large of 5% or more ownership in the business. So owner compensation that qualifies for forgiveness is limited to the lesser of 2.5 months of your 2019 compensation, or $20,833 if you're using the 24-week period of time, $15,385 for 8 weeks. The thing I just want to point out here is the logic behind this is they did not want owners to receive a windfall as a result of this loan. So owners aren't going to be able to give themselves a large raise or pay a bonus in order to spend funds and qualify for forgiveness. The purpose was to get the funds into the hands of your employees and to keep your employment at the same level as it was pre-COVID. So in addition to the cash compensation, you're also going to be able to add the state and local taxes that are attributable to the owner's compensation, plus retirement plan contributions. Similar to the cash compensation, retirement plan contributions are limited to 2.5 times of 2019 contributions. C corporation owners have the exact same requirements, except in addition to the things we mentioned for the S corporation owners, C corporation owners can also add the portion of their health insurance premiums that are paid by the employer. Self-employed individuals, which would also include independent contractors. This is going to be anybody that's filing a Schedule C or a Schedule F, is limited to 2.5 times the net profit on your 2019 Schedule C or F, or $20,833 for the 24-week period of time, $15,385 for 8 weeks. You're going to see those numbers apply across the board to all levels of owner compensation. Not included in owner compensation for self-employed individuals is health insurance, retirement plan contributions, and state and local taxes. So strictly, you're going to be limited to the lesser of the 19 Schedule C profit and loss or those standard thresholds. General partners, this category is going to apply to anybody that's receiving a K-1 from a partnership interest. The calculation is a little bit more complex. I don't want to get bogged down in the details, but it's similar to self-employed. It's also limited to 2.5 times of 2019 income, but the limitation is to the net self-employment earnings that are reported on the individual partner's tax return. And I just want to mention this because it does take into, the limitation applies after deduction of any unreimbursed partnership expenses. Payments must be made to the partners during the covered period of time. So the loan proceeds actually have to be paid to the partners during the covered period of time in order for the expenses to be qualified. And again, similar to self-employed individuals, health insurance, retirement plan contributions, and state and local taxes aren't applicable. Another category of payroll cost is health insurance. Health insurance includes premiums that are paid or incurred by the employer during the covered period of time. So these include the employer share of expenses. They also include dental and vision insurance premiums. That was clarified in a frequently asked question just not too long ago. Health insurance premiums that are not includable are any premiums that are paid by the employee. So if you are withholding a portion of the insurance premiums from your employee's paycheck, you would have to net the gross premium with the amount that the employee effectively paid towards their premium. Another thing that's not included is any acceleration of payment of premiums that cover periods outside your covered period. So in other words, you're not able to prepay your health insurance and it qualify for forgiveness. And finally, premiums for more than 2% owners of an S corporation also don't qualify. And that is because by statute, those premiums are included in their as payroll, as cash compensation. The next category of payroll costs that I want to talk about is retirement plan contributions. And these include employer paid contributions. These would be the employer share of or matching contributions on 401k plans, simple plans. This could also be profit sharing contributions that are made in relation to a 401k plan. They do not include any contributions that are withheld from your employee's check and then remitted on their behalf. So it's truly only the expense that is the employer's responsibility that qualifies for forgiveness. You also can't accelerate benefits from periods outside of the covered period. What this is really trying to prevent people from doing is fully funding a profit sharing plan based on anticipated compensation during the covered period and counting that as an expense. You would have to prorate that for the payroll that was actually incurred during your covered period of time. And the final category of payroll cost are state and local taxes. And as Lori mentioned, I think there has been a lot of confusion about what is included here. For most of the people that are watching this presentation, for people in Kentucky, Tennessee, Illinois, the only thing that's going to qualify would be state unemployment premiums. So the things that don't qualify would be any amounts that are withheld from your employees. So you aren't going to get to count your state income tax withholding. In Kentucky, we have a lot of localities that employees pay based on their gross wages, but those amounts are withheld from their checks, so they do not qualify in terms of forgiveness. So really, we're just, again, focusing on state unemployment here. In terms of non-payroll cost, the first category I want to talk about is mortgage interest. In order to be eligible for forgiveness, mortgage interest must be applied to underlying debt that is secured. It can be secured by real property or tangible property. And the debt had to be in existence February 15th, 2020. If the debt matured during your covered period of time and you renewed it, that's okay. That interest would still qualify so long as the original refinance debt was in existence on February 15th. One other thing you cannot do is prepay insurance. Prepaid interest is not allowed in terms of eligible expenses. Business utilities include electricity, gas, water, telephone, internet. There's a category, transportation, that's received a lot of question and hasn't been very clear about what was included in this category. There was some additional guidance issued in a frequently asked question towards the end of August that defined what is included in transportation, and it really basically said that the transportation category is only including utility fees that are assessed by state and local governments in the transportation of the utility to the end user. And again, for business utilities to qualify, the service must have began before February 15th, 2020. Rent is another category of non-payroll cost that are eligible for forgiveness. As Lori mentioned, the rent or lease agreement must have been in place on February 15th, 2020. One thing I do want to point out is there's been some additional guidance issued recently related to related party rent. I will say that this has been a clarification that was kind of counter to what we had advised clients on initially, but we do have additional guidance, and I do want to point out that they have defined a related party as any ownership in common between a business and a property owner. And so if your operating company has any ownership relationship to the underlying property owner, you're going to be limited in the amount of rent that you can deduct. The limitation is you're limited to the mortgage interest that's paid on the underlying property. So if you have a property that is free and clear of any debt, none of those rent payments are going to be eligible for forgiveness. And that like I said, that is a relatively new area of guidance. There's a couple of other areas that are issues that could limit your forgiveness. Lori touched on these, but those two issues could be that borrowers reduce the number of full-time equivalents, or that borrowers reduce the amount of salary and wages that they're paying to their employees. There's also some safe harbors around these, and I want to just broadly talk about how these issues are calculated and what you should be aware of. Generally speaking, an FTE or full-time equivalent is an employee who works more than 40 hours a week, or 40 hours or more a week. Employees that work less than 40 hours a week are going to be prorated. Lori mentioned that you could use, you could just count all of your part-time employees as one half employee. That works, and that's probably the simplest way to do it. You have to be consistent in applying that methodology. But if you want to do the actual calculation, you would simply prorate the average out, or the hours that an employee works, and divide it by 40 hours per week. Reductions that occur in your full-time equivalents during a period of time proportionately reduce your loan forgiveness. And I've included a quick example. Company A employed 10 full-time equivalents during the reference period. During the covered period of time, their employment reduced to 8 full-time equivalents. So the company only maintained 80% of their workforce during the covered period of time. That means that the company is going to total their expenses that are eligible for forgiveness, and only 80% of those are going to be forgivable expenses. So one thing we've been encouraging people to do, if we feel like that they may have had a full-time equivalent reduction, is to extend the period of time is to take full advantage of the 24-week period of time, because you could, in effect, outspend the limitation. Also just briefly want to touch on the fact that there has been a grace extended for layoffs and reduced hours when an employer in fact does offer to rehire the employee at the same level of hours and the same pay. The employee rejects the offer. The important thing here is that offer and rejection are documented, And the other requirement is that you have to report that rejection to the applicable unemployment insurance office within 30 days of the rejection. But if you do that, the reduction in that employee won't count against you in terms of your forgiveness. As I mentioned, there are two safe harbors related to full-time equivalents. The first is that you were unable to operate at the same level as before February 15th, 2020. The slide has some specific details related to that, but really what I want to say is this is truly that you're unable to operate, not that you aren't, not that you don't want to, not that it's a hassle, not that you're not going to make as much money as you were before, but that truly you can't operate, and it's because you're complying with requirements that are established by certain organizations. The second safe harbor is the one that we're seeing utilized more often, and that is that you did have a reduction, but that you restored or rehired your employees to the same level prior to December 31st, 2020, or the date of your forgiveness application. The other thing to pay some attention to, I haven't seen this happen very often, but I will just briefly speak that if you reduce employees hourly or salary wage, but are requiring them to work the same amount of hours and do the same amount of work, there you could have some dollar for dollar reduction and forgiveness there. Reduction in employee salary or hourly wage that is 25% or less has no implication on forgiveness, though. And I go through a couple of examples here that you can work through, but effectively you can reduce pay by 25% and still get full forgiveness. If you reduce it by 30%, you're going to have a reduction, a dollar for dollar reduction of 5%, the difference in the 30 that you reduce and the 25% safe harbor. Those rules, again, don't apply if you restore the wages to the pre-COVID levels by the earlier of December 31st or the date of the forgiveness application. That's all I have in terms of what expenses qualify. And I'm now going to turn it over to Mark Heckenberg, who is a partner with Kemper CPA Group.
Great. Mark, if you would turn, there you go, Mark. We are about to see you and turn your mic on. Thank you.
Can you hear me? Am I on there?
We got you. Thank
Okay.
you.
Okay, I just kind of wanted to touch on some things that hadn't been discussed. Most of the topics have been touched on, but kind of some things that remain up in the air are the deductibility of expenses that were used with the PPP funds. Originally, it was stated that, of course, the forgiveness would not be taxable income, but Congress's intent was for the expenses to continue to be deductible. Well, the IRS quickly issued notice 2020-32 and said that expenses that were paid for with PPP loans that were forgiven would no longer be deductible. And their position is that by allowing those expenses to be deducted, you kind of be getting a double dip. So the AICPA, along with really hundreds of other organizations, have urged Congress to allow full deduction for the PPP-related expenses. And AICPA believes Congress did intend that to be deductible. And lawmakers from both sides of the aisle had voiced their support for that position. But of course, as of yet, nothing's been done. And also this uncertainty makes planning for taxes and year-end, normally what you would do with tax planning, that's a big question mark as to when will that be taken into consideration. Until the loan's forgiven, it is a loan. So if at 12/31 your loan has not been forgiven, you've incurred those expenses, now you've got to file a tax return for 2020. How do you handle that? And that's one of the things that we'll definitely need to get some clarification on in order to file these tax returns. Or, will you have to file and then amend that return once it gets forgiven in 2021? Or will you just have to pick up income in 2021 that you'll need to plan for that scenario as well? Another thing that's kind of has been touched on, but as is really up in the air, is that a lot of talk's been out there about automatic forgiveness of smaller loans, because most of the loans that were made were under $150,000. So there was talk that in order to streamline the process, a lot of these loans that are at or below that threshold would be not automatically forgiven, but the forgiveness process would be streamlined expensively. So I would say right now that until and before that gets clarified, that you probably would want to wait and see for sure until the end of your covered period to be sure that you don't get that automatic forgiveness. Another thing I wanted to talk about was kind of at this point in time, kind of what is best practices for getting full forgiveness and what should you be doing right now. I would say because a lot the rules in the forgiveness have so many gray areas that right now, hopefully some of that stuff will get clarified in the near future. But I would say that you would want to start your application process and get all of your kind of ducks in a row to see where you are. One, to see if you could apply early because you've already spent the money, or you need to continue on. But even if you can use the easy application, there's a lot of computations and documentation that you'll need to have and that you will need to keep in your file, even though you don't have to submit it. So I would say anybody who's got these loans needs to be gathering all that information, and where you've had to make some question or determinations of calculations that are based on some interpretation, that you have all that support based on the interim final rules and frequently asked questions, that you have all that stuff in place so that if down the road your loan gets looked at, you don't have to go back and try to find stuff that may or may not be out there to find at that point in time. So I also say at this point, you just need to exercise your best judgment. Be aware of the guidance, read the application and instructions thoroughly, use what information you have to make the conclusions based on the best information that's available at the time. And kind of, at this point, probably do a wait and see to try to figure out the best point in time once we get some further clarification on how to proceed. So, and I would say probably at this point, just be patient, work with your lenders and see where, what guidance they can provide you as to what's the best course of action to get your loan. And that's what all I have to go with.
All right. Well, thank you, Mark and Ashley and Lori. We do have a couple of questions. So Ashley and Lori, if you want to rejoin us with your cameras on, that would be great too. And I don't know how you're going to decide who wants to answer them, but it may be something all of you would want to. But you've provided some great information, and we've had a lot of coverage through our Zoom call and again through WPSD's Facebook page as well. So a lot of people interested in this topic. So let me ask you, if a PPP loan becomes a grant, does the grant become income? And how will the grant show on a P&L and balance sheet? Who wants to go? Ashley, go ahead.
So yes, at the point in time that the loan is forgiven, I mean, there's two different issues we're talking about. If you're talking about just purely from a financial statement purpose, yes, it's absolutely income. We've been advising our clients to reflect that as other income, so not including it if you're in your operating income. But sort of as Mark alluded to, we don't know at this point in time, and I hate that that's the answer, but we really don't know what the answer is. We know what the answer is today. We don't know if that's the final answer. And the answer today is that effectively you will pay income tax on the forgiveness. It might just be that the expenses aren't deductible. It might be that, but at the end of the day, you are going to pay tax as it stands today. There is, like Mark mentioned, a push to, we don't feel like that was Congress's intent, but that's where we stand today.
Okay, Mark, Lori, anything you want to add to that?
I think that's exactly right. We really don't know at this point.
Okay. You know, we saved this seminar to the very end of the month, hoping that there would be more guidance, but it sounds like there's still a lot more to come. We do have another question. Tom may have mentioned this. If the IRS does not allow us to deduct the expenses for which the PPP loan was used, what advantage does a small owner have? And would it have been better off sending their employees for unemployment?
Well, I think you, as the business, would basically be back to zero. So you won't have gotten free money. You just will have gotten expenses paid for. So you're probably in as good or better position as it was allowing you to operate and keep your employees employed.
I think that would probably be the good part. They did keep their employees employed. So have you seen many forgiveness applications yet? Are you all getting those?
We process several. We have a lot that have applications in the queue with lots of communication going on. Some that, as Mark alluded to, they have started the application process, realized they didn't have quite enough to qualify for full forgiveness. So they are adding to it as they get additional weeks through their covered period. So we're really working through those. I mean, our goal and intent is for everyone to maximize their forgiveness. So again, going back to that communication with the lender, make sure you're having those communications to maximize those forgiveness amounts, because we want them to qualify for it as much as anyone does. So.
Okay, great. Well, you all have covered a lot of information in this hour. That's basically about all of the questions that we've had to come in. I think you've gone through very much in detail. So thank you all for joining us. What do you expect the next step should be? Hear more from more direction, or what?
Well, actually, we just got an email while we were on the call, and there is a lot of concern and a lot of push that Congress is going to go on recess without making any additional taking any additional action regarding the streamlined process. There's a lot of push from the banks and the banking organizations trying to get them to do just a single congressional action to enforce the streamlined process. Whether that happens or not, we don't know. We also, within that, SBA apparently has released some information. They are going to start processing applications within the next week, which is good news, because we have some that have been in the queue for over 30 days already. So we're wanting to make sure that we start seeing some of those work through the process. So we are at least maybe getting a little chatter that there might be some action coming. But I think Mark alluded to, I mean, just because you submit the application doesn't mean it has to be approved and officially submitted to SBA. Just be very transparent with your lender if you're just sort of testing your figures and making sure that what you're going to qualify for before you move forward with that process.
Okay, and you guys may see this other question that's come in. PPP loan will become income when everything is approved. Is that correct? That's the question mark. And then that may take months from the time they give info to the lender. Is that correct?
Right. Until it's forgiven, it's a loan.
Okay.
Yes.
Okay. All right. Well, thank you all very much. Lori with F&B Bank, Ashley with Williams & Lentz, and Mark Heckenberg with Kemper CPA. We appreciate the time you spent with us today. This may be a repeat, a seminar that we may need to do when we get more guidance. So we really appreciate your time today. I will say that the Paducah Chamber has really been working hard to provide information to our members. We have a lot of different events coming up. Tomorrow is our October breakfast, which we have as a political forum for State House District 3 and Paducah Mayor. You can register for that at paducahchamber.org. We are going to have another seminar about hub zones in November, so we'll be getting that information out for small businesses. That's very important. And then just a couple of other things. On October 7th, we have a public policy seminar with Secretary of State Mike Adams and Julie Griggs, our McCracken County Court Clerk, about the upcoming election. On October 15th, we have a mid-month check-in breakfast, and we're going to feature our youth lead students as graduates. On October 19th, we have a golf scramble with only a couple teams left for openings. And on the 21st and 22nd, we're doing our DC flyback, which we didn't get to go to DC. So, but we'll be hosting that here in Paducah. So thanks everyone for joining us today. Thank you as our presenters. We really appreciate your time. And all of this will be posted on paducahchamber.org as soon as we can get it converted around and posted. So thank you. I hope that has helped a lot of businesses today, and we really appreciate your time. Thank you.